getting settled and in, but you have turned up to equity crowdfunding for your legal tech startup with Kellie Morton from Birchal. So really excited to get into it. Before we do get started, though, in the spirit of reconciliation and on behalf of everyone here at ALTA, I acknowledge the traditional custodians of the land that I'm standing on here today, which is the Bunurong, Bunrawong and the Wurundjeri Woiwurrung peoples of the Eastern Kulin Nation. And I pay respect to their elders, past, present and emerging, and extend that respect to all Aboriginal and Torres Strait Islander people who may be joining us here today. So for those of you who don't know me, my name is Karen Finch, obviously. I'm a non-practicing lawyer. I'm the CEO of Legally Yours. I'm director of ProHelp Legal Australia, which is a new telehealth for video for legal platform. I'm the vice president of ALTA and I'm the co-leader of WALTA. And I'm also your host today for today's member meetup. So it's great to have you all here. So a little bit about today's session. So you've got a great idea, product or business, but how do you fund it? So since the inception of the CSF regime in Australia in 2017-18, equity crowdfunding has become the go-to funding source for Australian small businesses and startups. So today, Kellie is going to be talking all about, who is from Birchal, about Australia's leading equity crowdfunding platform. And we will be discovering, once I let my puppy dog out the door, what is equity crowdfunding? How is it different from other forms of capital raising? What are the benefits? And spoiler, there's more than just dollars. Who is it for? Is it right for your legal tech business now or in the future? And finally, show me the money. So as I mentioned, we have, and we're very lucky to have Kellie here. Kellie Morton is the Chief Legal Officer with Birchal, Australia's leading equity crowdfunding platform. Kellie has worked as a lawyer in Australia, London and New York, assisting startups and large corporations with M&A, private equity and venture capital investment activities. Kellie, welcome. Thank you so much for joining us today.
Thank you. Thanks for having me. Good afternoon, everyone.
It's lovely. So I'm going to hand over to you to get it going, but I just did want to make a note now, Kellie, before we get started. So have you had any legal tech come through Birchal, the equity crowdfunding is yet?
Not yet, and I'm waiting for it. Being a lawyer, this is my
all right. So
subject.
ALTA members that are on this call and that are watching, the challenge is set. So, all right, over to you. Enough from me.
Absolutely. Hopefully we can inspire someone to come on up through the regime.
Absolutely. And Kellie, we can put, if you've got questions, I'll be on the chat. So please pop in your questions as we go. I'll interrupt Kellie. So let's just make this as interactive as possible. So pop those questions in the chat. All right, over to you, Kellie.
Absolutely. Chuck questions through. I'm happy to kind of do them as we go along. I was thinking about this morning, having an M&A background. I remember the first M&A, one of the first M&A deals I did. It was before electronic data rooms, and I went into an office. There was like binders full of paper that had been hole punched, and it was before smartphones. And so literally to do the DD was kind of sitting there with my notepad and writing notes and then just going through it like that. No computers, nothing. So in some ways an easier time, but also it's good to see where legal tech is going, but I think there's much further it can go. So I'm kind of excited to see what's happening in this space. And at Birchal, we use some different bits of legal tech as well. So I'm always happy and interested to see what's out there. So in terms of equity crowdsource funding, what is it? So at its most basic, it's a way for private companies to raise capital or funds from the general public. An investor gives the company cash, and in exchange for that, the company actually gives the investor ordinary shares in the business. And so the investor becomes a shareholder. It's regulated under the crowdsource funding regime, which sits into the Corporations Act, and it's relatively new. It's only really been around since 2018. In terms of other forms of equity crowdfunding, so you probably already know about private equity or venture capital funds, pool a whole bunch of money to try and kind of invest in startups. There's always that family and friends to try and tap into, or sweat equity from your consultants or other advisors. There's the sophisticated investors or high net worths, but again, that can be difficult to tap into because large check sizes are usually needed to invest in. And then also obviously IPO and listing on the stock exchange. In terms of kind of non-equity fundraising, there's obviously debt and loans, which you can try and get from the bank or some other source. And then there's the reward or donation-based type crowdfunding. And that's more your like Kickstarter or GoFundMe, where you might try and pre-sell a product or just donate kind of to your local pub to try and keep them alive during COVID. Wrong way. So yeah, so the crowdsource funding regime really kick-started off in the UK, and it came out of the GFC when there was really no way for small to medium businesses to try and get capital. So the UK regime is where we all really look to, because it's quite a mature market now. And it was talked about in Australia for a while, but didn't really get traction until sort of the end of 2017, 2018. And Birchal was one of the first sort of handful of companies that got a crowdsource funding license. So we're an intermediary. So to access the crowdsource funding regime, you have to go through a licensed intermediary that holds an Australian Financial Services license. So we kind of basically act in the middle and connect companies with investors. But when it first came out, it was only open to unlisted public companies. And that was a real limitation on being able to access the regime in Australia. But shortly thereafter, it changed to proprietary limited companies can now kind of access the crowdfunding regime, which is great. And then fast forward to kind of end of September 2021, and the industry as a whole has really had its biggest quarter ever. So it's a great industry that's kind of growing quarter on quarter at the moment, which is great. It shows us that both companies and investors are really embracing it. So when the legislation came in, there was really kind of three game changers for the regime. It allowed small to medium businesses access a retail audience kind of for the first time, and really for a fraction of the cost that it would take to put together a prospectus. You can potentially, as a proprietary limited company, now have an unlimited number of shareholders. So when you raise funds through the crowdsource funding regime, that limit on 50 non-employees doesn't apply to you. And the real game changer is that these crowdsource funding offers can be advertised publicly. Other types of offers have a lot of limitations and restrictions on advertising. So you'll probably see, or you'll probably notice now, companies and Birchal ourselves, we are advertising these offers as you go through, so you can kind of access that broader public market. So other features: to access the regime, companies need to be an Australian proprietary limited or unlisted public company with net assets and annual revenues under 25 million. If you're over that, you're not eligible to access the CSF regime. Companies can raise up to 5 million per year through the crowdsource funding regime. Retail investors can invest up to 10K, and wholesale investors there's no limit. Yeah, as I said, you have to do an offer through a licensed intermediary. So companies kind of can't just do these crowdsource funding offers themselves on a website. And that's because we really act as a quasi-regulatory role. So ASIC kind of relies on us to be the gatekeepers of the regime. And offers need to be made under a crowdsource funding offer document, which I'll kind of get to shortly. So, you know, why did the regime come into place? And really it's because, as you probably know, as a startup or, you know, a small to medium business, finding capital is really time consuming. Your size and scale means you often can't access, you know, VCs aren't necessarily interested in you yet. You might be pre-product, just at ideation phase. You know, there's not enough track record there yet to kind of show a VC or to show the bank. Bank might need a mortgage or some other kind of expensive collateral. And, you know, previously Australia's fundraising laws actually restricted this kind of public equity fundraising. So it's pretty exciting for us, and kind of to toot our own horn a little bit, it's probably over 110 successful crowdsource funding offers now since the regime started. And we're probably up to about nearly 80 million funds raised, or companies have raised those funds, and, you know, we've supported them through that. And there's been over 45,000 investments. So that's kind of individuals investing in these companies, which is great. So in terms of how it works, each of the crowdfunding platforms, there's a few of us out there, we have a similar process, but they're also a little bit different. So I'll talk you through kind of what we do at Birchal. And we've done a sort of a standardized, streamlined and efficient kind of process to try and get the fundraising done within 10 weeks. And how that works is there's usually a launch preparation period, and that will be as long as you need to get ready. But you can set up a beautiful kind of company profile on Birchal, and you start creating your advertising assets. So there'll be a pitch video to get investors really interested, some other advertising assets. And it's a good time to start to do a legal and financial health check, kind of make sure you've got your financial statements up to date. If you need to do any restructuring, often people come to us either as a sole trader, or you might be operating under a trust. So you kind of just need to get your corporate structure all lined up. We then have what's called an expression of interest campaign, which is really a marketing campaign to start to build your audience and your list of people interested, investors really interested in your offer. It's a way to go to market and test whether there is actually interest out there at this particular time for your offer. So you're not accepting any applications for shares at this stage, but it's really starting to build that momentum in your campaign and find the people interested in your offer. And what we really focus on at Birchal is finding who are your biggest supporters, who will be your investor. So you'll see on the platform, we might have, like a camel dairy farm next to a vegan cheese business, next to a fintech platform. And that's because each of these different companies are marketing different people and different investors, So we use that period of time to really try to find who are the best people to invest in your business. And you start engaging with those investors, you get access to that list, you get to chat to them. The next period is the actual offer campaign. So this is where you go live with your offer document, the constitution of your company, and you start accepting applications for shares. And it's all a tech platform. So we're kind of a fintech platform. There's no paper. It's all done online. And you'll keep advertising your offer, and settlement will start to occur. We'll start collecting funds as well. And then you hit into the final stage where obviously we collect all the funds and you start issuing the shares to the company. There's two, kind of a critical point at that offer campaign where you have to set a minimum amount you want to raise and a maximum amount you want to raise. So say you come to us and you say you want to raise about $750,000 to kind of execute on your business plan. You might set but say you could kind of cope with, say, $250,000. That would be the minimum amount that you'd set. And then say you were like, well, I'll cap my investment out at $1 million. If you go through the offer campaign and you don't hit that minimum of 250, it kind of fails and you don't get to proceed through. But as soon as you go over 250, your investment offer is successful. And once you hit that $1 million cap, the offer closes as well. You can't kind of invest over. There's also a close deadline. So either your offer will close either at the deadline or the time you hit that $1 million cap. Sorry, hopefully that made sense. So what we do at Birchal, as a company looking to raise on the platform, we've got a back-end system where you get access to kind of all the data and insights to really optimize your campaign as you're going through. So you get the data on who's interested in your offer, the amounts they're looking to raise, and you can kind of track that the whole way through the campaign. And there's a whole bunch of checklists and guidance from end to end that really kind of get you through from start to finish. So in terms of industries, it's really interesting. We've found going through the regime that it's industry agnostic. So there's probably a perception that consumer brands or consumer products raise the most on the platform, but we've actually found that not to be the case, which is really interesting. And B2B platforms or B2B tech services go really well as well. So in the last financial year, we kind of do a lot of industry stats across the industry. So this is not just kind of Birchal, but we found that financial services or fintech was actually the most popular industry in the last financial year. That also covers cryptocurrency and kind of hot industries like that. Food and beverage was popular. That covers your breweries and craft beer, which is always really popular on the platform. Then there was software. So that's kind of everything else outside of fintech. It's apps. Healthcare, really popular as well. Sort of medicinal cannabis is quite big in the space at the moment. But then there's other industries as well, like real estate, ag tech is pretty hot, media and entertainment. So industry agnostic, and it's really, as I said, about finding who is interested in your product and who wants to back you and invest in you. And usually that's the people you're solving the problem for. Because what we find is a real mix of people investing from the heart and then also from the head. So, you know, people that just love your product, can't wait to get that particular problem solved with your product. So they just want to support you through. Others will see it as an excellent investment opportunity and want to kind of get in at, you know, pre-seed or seed kind of level.
And we need to add legal tech on there.
Absolutely. I'm here for it. I want to see that in next financial year for sure. To give you a bit of a feel for what we've raised in the past. So the one on the left here, which is Thrive, that is a great example of a B2B business. It's for financial services. It's a bit of a hybrid of, say, like Xero, your accounting, your bank. They call it a bit of a CFO in your pocket. When they did their offer earlier this year, they still haven't launched their product to the market yet. So there was no MVP for people to kind of touch and feel and trial. But they managed to raise $3 million from 525 people that are really just excited to see their product. But what they're doing now, which is fantastic, is using that community of investors to finalize the product, because they're going out to those people and saying, okay, what additional features should we have in here to make it worthwhile for you? What do you want? They're pretty close to the end, but this is just the final finessing as they're testing it, and they're using their investor base as the test ground for that as well. So it was this offer for them was a fantastic way to get kind of customer acquisition before they've even launched the product to the market, as well as an investment base. So kind of incredible. They had some VCs invest through that round as well, which is fantastic. So you can kind of tell from 525 investors, there's some lumpy checks in there.
Kellie, Michael, who's also our ALTA president, has just asked, following on from my comment before about legal tech, are you aware of any legal tech that have crowdfunded in Australia? Do you know of any?
I don't think I've seen any across any of the platforms. Yeah. And I was going to do a quick look last night globally, because we still, the UK market's really hot, and the US is hot as well. And I meant to check, but I ran out of time. But I don't think I've seen one in Australia. So that can also be a great marketing hook as well. I'd love to see it. Then, so a little bit off piste is Seabin Project. So they're in the sustainability space, but I sort of call them public infrastructure, because what it is basically a bin that sits in the ocean and collects plastic and oil and waste. So you and I as a consumer wouldn't ever really buy one, like a bit of like a street light, but you need it. And they've raised twice on the Birchal platform now. And their most recent raise earlier this year, they raised 1.2 from over 1,000 investors. So that also kind of shows you it's just people in the public just really supporting what they're doing as a business and want to see them grow. So even though I can't buy a Seabin for myself, I'm interested in what they're up to and what they're doing. So I think that's pretty incredible. Xero Co is a consumer products business. They're direct to consumer e-commerce. They've just gone live on our platform this morning. about to hit all sorts of records. They're again in the sustainability space. They do ocean cleanups, take a whole bunch of plastic from the ocean, recycle that into reusable home care products, and they have like refill pouches that they clean as well. So instead of buying single use like spray and wipe and all that kind of stuff, it's more of a circular economy. Mike will probably kill me for butchering that explanation, but you can have a look at it on the platform.
And they broke your platform, is that right?
They broke the platform this morning. Yeah, we've never seen so much interest. This is kind of incredible. So
amazing,
madly happening in the background. I'm sort of watching to make sure. So as you tech platforms all know, it's you think you can kind of test everything before it goes, and it still happens. And then Black Hops is just kind of a great example of the classic brewery. They raised 400K early on in the regime in 2019. And your breweries are kind of a great case example. Another one I meant to add on here, which is kind of analogous, it was in the financial services space, called Advisor Ratings. It's a wealth management platform, and I think they raised about over 200K from about 500 people. But again, all the people that invested were financial advisors. They were just super interested in the product and really wanted to see it get up. So I think that's kind of analogous sometimes to the legal tech space as well. And as I say, again, it's about finding your audience. The other thing we can do as part of these offers is, investors pay cash for shares. The other thing you can do is add on investor rewards as well to try and get people extra excited and interested in the offer. And some of those things can be, they really range from, a t-shirt to a mentor session with, one of the founders, or joining, a product investment committee. Or one pub actually had, if you invested, I can't remember, just say it was over 10K, you could get your name on a bar stool at the pub. So people could literally come in and go, hey, that's my seat, see, it's my name on it. So it's a real way to just kind of engage people. So in terms of stats across the industry, there's been well over $100 million worth of funds raised for Aussie companies now, which is great. In terms of the average deal size, so what companies tend to raise, you'll see from previously, it can go anywhere from, 150 grand up to 5 million per year. The average deal size is around 700,000. And we've got different stats on, if you're a pre-product, pre-launch, there's sort of certain, a range that you can kind of expect to raise through the platform. If you've got a particular trading history, sometimes that can mean you can raise a little bit more, but there's always outliers. So, every company is individual. So there's kind of it's not a tick box exercise, but at least it gives you a kind of feel for what's possible. And yeah, the average investment size for individual investors is around $1,500. But again, the biggest single investment we've had, which was on the Birchal platform, I think 2019, was $1 million. So one single person invested $1 million in, and they found out about it through a Facebook ad. So it was kind of, it's that dream story. It was an investment in Shiva Rideshare, which is an all-women's Uber, basically. She obviously didn't start, or he, I can't quite remember, I assume it was a she. Wasn't planning to invest $1 million, but after having conversations with the founder through the whole process, eventually went, great, I'll put $1 million in. So that's still the record. It's pretty incredible. So, there's often a bunch of myths, and I hear it all the time around equity crowdfunding because it's a new space. And there's some interesting responses to it. So I've heard, companies only turn to equity crowdfunding out of desperation because they can't get funding from, venture capitalists. And, what we're hearing, actually, it's become choice for founders to come through the equity crowdfunding because, and there's a few different reasons. Some are kind of a values-based brand and they want their customers to share in their growth. So Mike from ZeroCo is an example of that. He's done everything from, a Kickstarter campaign to VC investment but he wanted this round to be for the crowd and his customers. It's a way that you can, as a founder, retain control and therefore the direction of your business for a bit longer. So if you're giving one single large check away to a VC investor, often you're having to, equally give up a bit of control too. Whereas in equity crowdfunding, you can kind of set the terms and retain control for a little bit longer. Again, you get to kind of set the terms of the offer and the valuation of your business as well. So they're kind of interesting reasons why people actually choose to do equity crowdfunding. I hear that, crowdfunding companies become uninvestable after they've gone to the crowd. Again, we've sort of anecdotally, we have seen VCs invest through the platform. We've had companies get VC investment afterwards. And certainly overseas, crowdfunded companies have had some pretty incredible exits. So there's some good examples, like Revolut came through crowdfunding and returned significant investments to their early investors. Brewdog's a big brewery that's done the same thing. And I suspect in Australia, we'll start to see some interesting exit opportunities for some of the companies too, which is great. You hear, the crowdfunding investors are mum and dads, they lack sophistication. And I think I just put ... there because I think we all know now that people are getting more, financially literate. They're interested in this space. It's a way to access startups and kind of diversify your portfolio. So I kind of park that. I don't really think that's true. And then there's the myth of that crowdfunding companies have messy cap tables. And why that is because in Australia, and this is slightly different to some of the regimes overseas, if you kind of Google it, in Australia, when ASIC and the law was put in, individual investors have to invest directly into your company. So they hold shares directly. You can't kind of warehouse the shareholders off in a nominee structure. So the myth is that you're going to have potentially hundreds or even thousands of shareholders sitting in your cap table, and how on earth do you manage that? And that just becomes too messy. What I would say to that is, remember that those hundreds or thousands of people are actually your biggest fans and customers and your, brand advocates. So I kind of question whether you'd call that messy. But from a practical perspective, there's online share registry services now, which make administration really easy. These are the people that will issue your share certificates. They kind of become digital. You can communicate with all your shareholders through that platform. You can do kind of quarterly updates to your investors to kind of keep them at bay. But the feedback we get from companies is not that you're getting, hundreds of emails every day from customers, from shareholders asking things. So, and I will always say a well-drafted constitution actually helps you manage a lot of those issues going forward, because what you want to do is make sure that you can kind of continue to run your business as a majority owner without having to go back for shareholder approval for, certain matters as you go along. So that's kind of a critical thing we look at and talk about early on before you actually do your crowdsource funding offer. Some other benefits to kind of think about then for a company, obviously it's access to capital, it's customer acquisition. So a lot of companies come to us and they really time, particularly those that haven't launched their product yet, they'll time the launch of the product with the crowdsource offer campaign. So you can get customers either on a wait list or, first through, as well as shareholders at the same time. Definitely a way to expand your network. We find all sorts of people come out of the woodwork through the investment and EOI process. And we get people, they might find their chief marketing officer or their CFO through this process. So people you might have just never have come across find out about you, and conversations go from there. As I mentioned, it's a way for you to kind of control the business for longer. It's a really transparent process. It's open to both retail and wholesale investors. Everyone comes in on the same terms. So you don't need to negotiate with VCs or family offices. It's set. Industry agnostic. So, I firmly believe legal tech can benefit from it as well. works for all stages of the business. So pre-revenue, pre-product, still just an idea, it's possible. Or if you've been trading, or if you've got a prototype or, you know, MVP, or you know, in testing, that's great as well. It's easy, efficient, it's online, and it's, you know, comparatively inexpensive to having to kind of negotiate contracts and agreements with people.
Kellie, can I just interrupt you before you go on to the investors? Can you just, I know in a session we've previously run together, there was lots of questions around the price of how that works. So there's a set price, isn't there, with Birchal for that first bit, and then for when you're actually raising? Can you just give some information there? Yeah,
absolutely. So I'll go back. So putting a company profile on Birchal is absolutely free. You can kind of do that at any time. Once you go through the EOI campaign, I got this wrong last time and I didn't double check. I think it's about $900 to publish your EOI campaign. And these are Birchal's fees. So there are some other third-party costs, which I'll get to. Then the offer campaign is 6% of the funds raised plus $2,800 for an administration fee. And that covers everything then through to settlement. So funds come into our trust account and we kind of manage the process that way. There can be third-party costs. So marketing and digital advertising is a key cost here, because it's finding, if you don't already have a list, so some customers will, or companies will come to us with a database of their existing customers, which is helpful. Some come to us with nothing. So a lot of that advertising is building that list. If you need to do kind of a legal health check, sometimes there's fees with redoing your constitution, because people come to us with, you know, off the shelf kind of constitutions, accountant fees, they're kind of the main fees. And then, as I mentioned earlier, an online share registry, they're a bit like a zero subscription. You kind of pay an amount each month, but I think they're relatively inexpensive and I think worthwhile. So you're not kind of managing an Excel spreadsheet, which I remember doing.
Absolutely. And the question then from there as well, so if for some reason you go through that process and you fail to kind of get that minimum, you actually give the company those documents. So all that kind of stuff that they've had in terms of the prep, they can take away. So they've got that pitch preparation. Yeah, absolutely.
So the offer document you prepare, the EOI list, it's all your data as well. So that's how we work. I don't know if all platforms do that, but certainly all of the EOI list that you build during that EOI campaign period is yours as well as ours. So you can kind of keep those conversations going. Some people do an EOI and for whatever reason, either decide not to proceed with an offer campaign, either they just don't want to, or there might not be enough interest in the market at that particular time. And sometimes that happens. So people will pause and come back at another period. Sometimes there's macro things that just are happening in the industry. And that can work for you and against you. You know, we've had some companies that have come on and just managed to hit it at the right kind of zeitgeist and it takes off. And if you go to the offer campaign and you don't hit your minimum, obviously we don't take 6%, but we do take that admin fee just because there's a whole bunch of work that goes on in the background as well. And so other benefits, obviously, for investors, there's all this talk about it democratizing investing, you know, meaning it's a way for you and I to invest, you know, sometimes as little as $50 in these early stage companies that you wouldn't normally get access to. Early stage or pre-IPO companies are often kind of walled off for sophisticated investors. So definitely a risky asset class. I always have to say that as a lawyer, but it is a way to diversify your investment portfolio if that's kind of what you like to do. Really low barrier to entry to invest. It's a really simple process on the platform. It's a regulated regime. So as investors, as retail investors, there are investor protections under the law and there are cooling off rights, 5 business days. So if I invest in and there's, you know, no questions asked, you can just automatically withdraw your investment. You know, there is the possibility, obviously everyone's wanting some investor returns if possible, no guarantees. there is a big risk warning that goes on everything that we do, and that's kind of regulated by ASIC and the regime. That, you know, these are early stage investments, so you might be holding them for, you know, medium to long term. There's not always a liquid market out there to kind of trade these shares, so investors go in kind of knowing that. But it's a way to support your kind of favorite Australian business from the outset and become an owner. And I think the transparency is another great thing for investors. You're not, you know, that you're not getting a worse deal than the big VC fund down the road. Literally everyone comes in on the same terms and price. You know, they're not getting preference shares or whatever. Some companies might already have that on their cap table when they come to us, but under the crowdfunding regime, it's ordinary shares. That's kind of it. That's all that you can do so far. Hopefully, ASIC looks at changing the regulations and we can offer other types of securities, but currently kind of that's it. Because overseas there's safe notes and kind of all sorts of other good things. This is some of the more kind of legal things to bear in mind. There are certain types of companies that can't raise under the regime. They're really limited. It's things like investment companies. So if you can't basically take funds from the crowd and then go just invest that in other entities or schemes, what ASIC says is that's really like a managed investment scheme, and there's another whole set of laws that can kind of that can govern that. You can't use the funds to kind of provide credit facilities to related parties that aren't wholly owned subs. So it's sort of like you can't raise funds and then pay yourself a loan basically as a director. It's really a investor protection kind of thing. Ordinary shares, we spoke about that. You have to have your principal place of business in Australia. So it's always something to be mindful of if you've got kind of operations overseas. Usually it's fine, but this is an Australian regime for kind of Australian businesses. And you need to have a majority of your directors resident in Australia. And you do need to have a minimum of 2 directors if you're a proprietary limited company. So a lot of solo founders will come to us. It's just them in the business. You do need to find a second director. They don't have to necessarily be an executive director in the business day to day, but it's another one of those checks and balances, I guess, ASIC thought about, was like, okay, just to have a second director kind of help manage the business and protect shareholders.
And they can be related. They can be married. That was
can be related. Yes.
That was a question that came up.
Yeah,
can be related.
Absolutely. We have many brother-sister teams, husband-wife teams, father-daughter teams, all of it comes in. Retail investors we spoke about in the offer document that is prepared. So it's, I did speak about that briefly. So it's kind of the one thing that's most time consuming as part of a crowdsource funding offer is preparing your offer document. So it's certainly less detailed than a prospectus, but it's more detailed than an IM or a pitch deck. But ASIC prepared this, that, you know, anyone should be able to prepare this for their own business. The idea is not that you have to go and get lawyers and corporate advisors to prepare this for you. And there's a standard template that we have and some guidance to help build for companies to build this out. But it's a way for you to describe your business model, the strategy. So kind of what do you want to do in the next 6 to 12 months with the funds that you raise under the crowdsource funding regime? Who are the key people in the business? You need to put your financial statements in there. Even if you haven't raised any revenue, you put like a balance sheet and a profit and loss statement in. You talk about some of the key risks in the business. And then, yeah, if you've got products, kind of just describing what those are as well. It's supposed to be a manageable exercise for people. And the overarching obligation is for it to be clear, concise, and effective, and not be misleading and deceptive. And it's something, you know, people usually put it together in 2 to 3 weeks. It's an intense period, but it's not something to labor on forever. But the idea is to give investors enough of the material information to make an investment in your business. So you can't kind of cherry pick information or leave things out. You do kind of lay it out for everyone.
Kelly, we've just had a question. Do you have to offer voting rights? So can you have a class of ordinary shares without voting rights?
No. So this was the one thing that ASIC did when the regime came in. It had to be, one share, one vote, and regular ordinary voting rights. So if you start to take the voting rights away, you're starting to create a different class of shares. So what companies will do is set up their constitutions in a way that allow them to manage the business. So what's kind of happened is a lot of companies will have shareholders agreements and an off-the-shelf constitution usually. What's become industry practice is that shareholders agreement actually gets terminated and all the key provisions go into your constitution. So you've got kind of one governing document, because once you've got hundreds or thousands of shareholders, trying to manage a shareholders deed becomes unwieldy. And there's also legal implications of actually trying to get that signed up on day one. You kind of can't do it through the platforms. So companies will put into their constitution things like drag rights. You might modify or remove preemptive rights, so you can kind of do extra fundraising in the future. People will think about how much of their business they give away during the crowdsource funding round. So often it might only be, 1 to 10%, sometimes 20, 25% of the business. So generally you as a founder or, kind of initial controlling shareholders retain that over 75% control going forward. So you can kind of still manage most decisions without going back for shareholder approval. But it is an interesting thing to get sorted early before you go to the crowd, because you want to kind of set it and forget your constitution, and then it should work for you for a pretty long period of time. It's an interesting thing for people to get used to, because we're all used to kind of shareholders agreements with the constitution, but it actually surprising. Even I coming into it was like, oh, I don't know about this. But it actually works really well, and companies actually end up loving it because most don't understand their agreements anyway, and then this becomes one document for everyone.
I think that helps, having your legal background telling us, because most of us probably sitting on this call, and most in legal tech, have a legally trained founder as part of, it's a bit of a generalization, but yeah, so it's good. It's good.
Yeah, I'm probably not convincing anyone on this call, but it is a good thing. And a whole bunch of companies have been through this now, and there are lawyers. So we don't advise companies because obviously I'm acting for Birchal, but we've got a bunch of other firms and accountants that advise company and are used to the regime, but I'm always around to give kind of guidance, I think is what I call it, not advice, to give guidance on how to manage a lot of this. But also obviously legally yours can help too.
Oh, thanks, Kelly, for the plug. And that's important too, because there are lawyers that actually are really familiar with this process in terms of the equity crowdfunding. So, you've given, I think, is it right, Birchal gives some training, kind of not training, but, advice and guidance to the lawyers as well, so they can get their head around.
Yeah, 100%. It's a new regime. So, everyone's kind of learning as you go. The good news is there's a lot of companies that have been through this now, and there's a lot of good and best practice out there, but always interested to hear and see kind of new ideas. It's kind of the space we're in, which I love, and I think it's a good way that the more we can make this efficient for companies going through it, and then also afterwards, because you want to just then get on with running your business. You don't want to be dealing with kind of shareholder matters and being stifled through that. But we stay in touch with companies as well afterwards and kind of get learnings as they're going through as a crowdsource funded company. So you're never kind of on your own with a lot of this stuff. If you're interested in raising, we've got a whole bunch of information on the site, and then there's also a raise investment page which has an eligibility form. So it's pretty short, but it kind of ticks through some of the key eligibility requirements. And then, if you wanted to do it, a campaign manager will get back to you, but, always happy to answer questions and kind of chat through the regime in more detail. I've kind of whizzed through that quite quickly, but is there any other questions in the chat?
Yeah, absolutely. So, and there is a lot of information there, and I think you're right. I think, you know, there's probably a lot of us that are defaulting to our legal brain, going, "Oh, but how?" and really, and so let's get some conversation going. Does anyone have any questions about anything that Kellie's gone through, or sort of how it works, or anything else? Okay. Oh, Doris, do you want to unmute and ask your question? We're a friendly group.
Sure.
Hi, Doris.
Hi there. Thanks, Kellie. That was really interesting. Yeah, my question is, like, so we have exactly what you said. Like, we've got a shareholders agreement, we've got a constitution, which is basically just, you know, here's the government typical constitution. So we really just rely more on the shareholders agreement.
Yep.
If we then fold the shareholders agreement into the constitution,
yep.
and you know, then later want to raise a seed round or like a Series A or whatnot. I mean, clearly a VC is not going to be just happy with the constitution. So how does that usually pan out?
Yeah, you know what, that's what we thought too, but VCs are investing into these structures and they're becoming more and more used to it. So what they might want is that VC coming in later might want a different class of shares, or, you know, a seed A or a preference or something like that. So you can kind of negotiate that in and add it to the terms of the constitution. We've had VCs come to us with existing shareholders, companies coming to us with VCs in their shareholders agreement, and they have actually agreed to terminate and put everything into the constitution. Because once you actually start to check off each of the provisions, you go, actually, all of that can go in the constitution. There's rarely things that need to sit in the shareholders deed once you actually go through the process of ticking each of the clauses. It's only if sometimes there might be some really private sets of rights, special rights that some people might want to have. And in those cases, sometimes there might be a side agreement with people, but it's pretty rare. We've actually found VCs getting used to it and coming on board. So that's what I thought too, because I come from a private equity, big end of town background. So I thought, no one's ever going to agree to this. It's ridiculous. And I have, so far, everybody has. So, yeah.
Okay, that's good. That's good to know. Thank you.
Yeah.
I guess another question, if I may, so another question is around, so we had early investors, like, you know, 7 investors, some of them overseas, investing through their whatever trust funds or whatnot. So already that with those 6, you know, entities, investors and ultimate owners has been quite a pain, like doing all the secretarial work like S6. So the thought that there might be 500 investors, some investing through a trust, like, you know, I mean, that is a lot of, if it's not done through one platform vehicle, but they all have to get individually onto ASIC, like, is one of those companies that you had mentioned, like the online share registry, like are they taking care of all of that? Or because I mean, every investor then has to be, you know, chased up for, like, we need your tax file number, we need your, you know, what's the address of your trust, like, you know, all of that.
Yeah, absolutely. So when an investor comes in to invest into your company on the platform, you create a virtual account and then you put your name in, you put your address, and you can there's options to invest via a company, via a trust. They're usually the main one. So you put all those details in, you go through a KYC process. The application for shares is online. So all that information is sitting online. You review the offer document, you click, yes, I've read it. There's a very short form subscription agreement that says, yes, I'll agree to pay the money, and the company, I agree to issue the shares. That's all online as well. And then all that information is captured. We take the funds from people, and then once kind of the deal is closed, and once we've captured all the funds, we then hand that information to these online share registries. So they've got everyone's details and it gets uploaded to the platform. And they then, they're the ones that email and manage it out. They issue the share certificates themselves online, and they do your ASIC filing. Most of them, I think all of them do your ASIC filings as well. You don't have to, I think with ASIC, it's just your top 20. So you don't have to actually lodge the 484 for thousands of shareholders. I think it's just your top 20 from memory anyway. And there's just a separate form that says, you've done a crowdsourced funding round. So actually all of that actually becomes pretty manageable, surprisingly. Yeah. And I thought there would be more issues with that, but these people genuinely want to invest. So if they're missing details, they get back to you, and yeah.
Okay, because we also have a subsidiary in Singapore, and so then Singapore wants to know every ultimate owner of every investor of the entity in Australia. And so I suppose the question then is, are they happy to just see the top 20 and forget about the tail?
Yeah, that's interesting. Like, hopefully they're not going to care about someone who holds 0.0001% of the business eventually. But we would have, it'd be something to work through, but I think you would have most of the information that you would need. Yeah, but that can be, so, and that's the thing, crowdfunding is not necessarily for every company, because I think it's in Western Australia, if you are like a liquor licensee, exactly that, you have to give information for every single shareholder in your company. I think it's if you're a private liquor licensee, you have to give information about every single shareholder. So to do a crowdfunding offer just is not possible for private companies. I think it's in WA. If you're a public company, it's different. The liquor license, the government doesn't require you to list every single shareholder. But yeah, if you're private, it's like, you just can't do it, because as if you can really get hundreds of ID documents from people. But that would be something, if that was going to be a difficulty for you, it'd be something worth figuring out before you kind of go all the way through it. Yeah. Yep.
Yeah. Thanks.
No worries.
And Kellie, we've only got a couple of minutes left, so I just wanted to ask a question. I was actually curious, and if anyone else has got a quick question, please pop it in the chat. But I know that some of these equity crowdfunding campaigns get a lot of PR. Like, that's one of the benefits. My marketing brain goes and says, that it's talked about and all, it gets picked up on, the local news, Channel 9 News, and the media things. Does Birchal have relationships with them, or are those media companies sort of looking, because it is kind of, there's such a good story around, these businesses going through? Is that part of the process?
Yeah, it's both. So in the early days, just the fact that you were crowdfunding was interesting. That's become less interesting for people now. What they want to know is what is different about your business, and why is it exciting, and why is it newsworthy? And the fact that you're crowdfunding often is either not mentioned or it's kind of secondary to your main purpose. We've got relationships with the outlets, and then often companies might specifically hire a PR agency for this particular campaign, because it really does drive brand awareness and then investment awareness. It's a combo of both. We push it out and advertise, and then companies do it themselves as well. Yeah.
Oh, I love it. Well, we might end it there. We just about to hit onto the 12:55. So thank you so much, Kellie, again. I feel like we should take this on the road.
Yeah, great. And find me on LinkedIn and ask me any questions.
Absolutely. At birchal.com, you can go, and all that information, a lot of that information that you ran through as well is publicly available on Birchal.
Yeah, we're pretty transparent with everything. So most of it's on the site. We're doing a bit of a refresh, but it should all be there somewhere. Yep.
Oh, I love it. Well, thank you so much, Kellie, on behalf of all of us here at ALTA. These sessions are so important for us to run and to educate and support our legal tech. So the challenge has been thrown out. Let's hope we can get a legal tech company and we can all get behind them at ALTA and get you onto this equity crowdfunding, which would be very, very exciting. Before we stop the recording though, just a couple of announcements. We've got a couple of events coming up in November for those of you who are listening or on the call. So we've got a ALTA, our next Women of Australian Legal Tech Association think tanks, coming up on the 11th of November. We're going to get back into our ALTA diversity report. So any women of ALTA, both advocates and legal tech that want to join, we really want you to be part of that conversation. And we've got the incredible Jo Stewart-Rattray, who's going to talk to us. She's been to the UN. She's been part of, advocating on behalf of girls and women in tech in a broader sense, and helped the UN devise their 6-year plan about how we are going to make improvements into STEM around the world. So don't miss hearing Jo speak. So that's exciting. 11th of November. Our ALTA AGM is on the 17th of November. So at 1 p.m, don't miss it, put that in your diary. And we've got our last hour of power that we will be having on the 25th of November. So I think we're actually full up. We will be hosting more hour of powers next year, but make sure you get your expression of interest in and don't miss out on that opportunity to get your legal tech product or service in front of a global audience, which is incredible. All right, that's enough from me. We will let everybody go and have their lunch, but thank you to those who attended. Thank you, Michelle, for all your behind the scenes, and thank you, Kelly, so much for joining us. Great session. Thank you.
Great. Thanks, everyone. See you.
Bye.